just how much does this big tech company need to rein in on costs to satisfy Wall Street?
Yeah, no, I think that's kind of what is top of mind for investors right now. I mean, if you kind of think about it, I mean, going into the third quarter numbers, I think everybody expected very tough economic conditions, right? In an ad environment, just kind of what we've been seeing here and been hearing in recent months. The problem is, OPEX continues, at least in Q3, to grow north of 25%, while the top line has slowed to about 6% growth. And that's the real issue here. Our view is that they are going to focus on, the OPEX side of things. There's a ton of levers they can really pull on the OPEX side of things. And to us, really, that was the big disappointment in Q3. But in all fairness, it probably takes a couple of quarters here. So our view is we probably see the bottoming in terms of, EPS reductions in terms of the OPEX growth side of things, probably in the first half of next year before we see a reacceleration of growth in the second half. And you see that full, kind of benefits on the cost-cutting side of things over the next 2 quarters.
The decline for YouTube ad sales also really stood out. A number of analyst notes also talking about it this morning. This was the first time we saw this since the company reported its performance in YouTube in 2020. What's going on here?
Yeah, I mean, I think there's a number of factors. I mean, clearly it is, largely driven by what's going on in the macro side of things and the ad side of things. I mean, it's hitting all aspects of Google's business now. Search historically has been very resilient and continues to be very resilient here on a relative basis. But on the YouTube side of things, you're seeing a shift, clearly from kind of these longer form videos to short form videos, and you can thank TikTok for that. But when you do that, there's also kind of less revenue potential tied to those type of videos. And also, there are a number of factors that they're throwing in there to help better monetize that business. Again, it's going to take a couple of quarters for that to fully come into fruition. But at the end of the day, it's largely kind of, what's going on the ad side of things. And of course, kind of the shift from longer to shorter form videos.
So, Angelo, is the takeaway here that Alphabet is being less affected by competition and more by just the macroeconomic conditions? And if so, I mean, is this a reason to buy the stock on weakness?
Yeah, I mean, listen, in our view here, I mean, typically, when you're thinking about the ad space, I mean, there are going to be times, macro issues out there and times of, cyclical factors that are going to impact this business in general. And, we continue to think there's no structural issues here as far as Alphabet is concerned. And we also have to think about the tough comps, right? I mean, this was a business that grew north of 40% a year ago, and they're kind of bumping across those tough comps along with kind of the Forex headwinds there. So in our view, again, these businesses on the ad side of things probably bottom here over the next 2 quarters. And in our view, yes, you look to be more constructive on this type of weakness.
What will you be looking for from Meta tonight?
Yeah, I think Meta is going to be a lot of what we saw, on the YouTube side of things, and also what we saw from Snap's results last week. So it's a name that we continue to avoid, and we think probably going to get hit a lot more than what we saw on Alphabet's side of things, as to be expected. But at the same time, we think a lot of those expectations have been built into the stock.